What is up, guys? Welcome back to another video. Today, I'll be sharing my weekly watch list. And as always, if you enjoy these videos, make sure to like, comment, and subscribe. I've been putting my full effort into these weekly watch lists, and they have been paying off big time. A lot of people have been giving me good comments and saying they've been following it and just learning so much about them. So thank you so much for joining in. Thank you for making this commitment to yourself. And let's start the week off strong. So without further ado, let's get right into it. So looking into this week, tomorrow we have no news. Tuesday, we have news at 8:30, 9, and 10 a.m. The ones you want to be careful of is the 10 a.m. because we don't want to be in trades when news drops. So we have new home sales and new consumer confidence. Please be careful trading with that news being at 10 a.m. Wednesday, we have 8:30 news and 9:30 news. At 9:30, we have Fed Chair Powell speaks. So please, again, right off the open of the market, be careful trading because that could impact the market big time. So please be careful. Wait for the market to form some type of trend and then take a higher probability entry. Thursday, we have 8:30 a.m. initial jobless claims and 10 a.m. pending home sales. Friday, we have a lot of 8:30 news. Then we have a 9:45, and then at 10 a.m. we have consumer sentiment. So again, I know I sound like a broken record. Just please be careful when you're trading around news. Now getting into this week's watch list, first we have SPY. I have two demand areas for SPY this week. My first one being this 430 area. 430 can hold some significance as well because of the whole number. And then the next one would be 426. Down here at this 426, I could definitely see a lot of demand being down in this area. My only supply area for this week will be this 436. Now, if we do break above, I definitely can see us trending up past 439 and potentially all the way up to this 442. Looking at the macro picture, we have been trending up. So even though we had this pullback last week, this could be a higher low and continuation to the upside. So we don't want to rule that out of the equation. Just make sure you can be ready for that and also trade in the market with no bias. I have two tickers that I don't have setups on, but I will be watching this week for trend entries, and that would be Riot and Mara. The reason why I'll be watching these names this week is because crypto picked up a lot of momentum last week and a lot of buyers seem to be stepping in. So I'll be watching Mara and Riot for potential trend entries to the upside. Moving on to more supply and demand setups, my next watch is Apple. This one's really simple. I have a 187 supply area, and I'd be honestly more interested if we can rally above this level. A rally rally, again, what is that? That's when price actually moves up into our supply bases and then makes another leg up through the supply zone, meaning that orders got digested in this area. There was more buyers than sellers, which pushed the price upward. My demand area would be around this 183. For any of y'all that still struggle with rally, remember on my last week's watch list, if you go back and watch that video, I gave you all an Amazon setup where I said, I'm really looking for a rally over the supply zone. And if you look on my screen here, we have Amazon, right? And we pushed up above this supply. And what happened? We based on this supply zone and continued the next leg up. That is what you call a rally-based rally. The next watch we have for this week will be Tesla. This setup is something that I don't trade all the time, but it's definitely something that I thought I should bring to your attention, and that is a head and shoulders pattern. You can see we have a shoulder here, the head, and then the shoulder here. What does this mean? Well, the neckline is down at this 248 level. Now, if price action comes down and closes below this level, I definitely can see a lot of downside for Tesla. If you're someone that's more cautious with their entries, you can wait for a close under this level and then a retest of this level to go short. So basically, all I'm watching on Tesla is a candle failure of that 248 level to find a short entry. Again, this is the shoulder, this is the head, and this is the other shoulder. A break of this neckline will give us a short entry, and this is a bearish formation. Moving on to my last watch, it's a higher risk setup, lower probability, more of a scalp type of trade. It's this Microsoft. You can see we formed a gap here at 338. Now, I would like to see us push up to this 338, and again, look for a candle close above this level to go long to fill this gap, or we can reject this level if we have a candle failure and close below this level. This is definitely a more scalp type of setup and more risk to it. But again, some of y'all trade that way. I don't typically trade that way, but I definitely think this is something worth watching. With that being said, that concludes my watch list. However, I do want to show you one other thing. On my previous weekly watch list, I gave you AMD as my main short watch, and it paid off big time. I told you about this liquidity sweep. and how we seen a large reaction as we broke those highs and broke down. That was institutions getting filled short. And what happened? We seen a continued push down from around 126 all the way down to 108. These are the type of moves that we look to capitalize on. Thank you all so much for watching. Again, make sure to subscribe, hit that like button, and comment down below if you enjoy these videos. And please, please, please stay tuned. I have a lot more content for you. Thank you all so much. Have a great week. Trade safe. Peace.